You done this making a big scale.
Okay, that's for motion. Segment 2. Thank you.
The same time.
At 8 o'clock. Okay. Why don't we get started here? We've got quite a few things to do. How's everyone doing? Good. Excellent. So we're going to hand in the assignments first, or else you're going to be doing it all at once. Do you want to hand in your assignment? I'm sorry? And this week's too. Last week and this week's. Yes.
Right? Yeah.
He's not here.
Can you give me just a little time?
No, 'cause we have to. You'll see the solution.
Yes, that will be the solution. Thank you. It's okay. Do you research?
Okay, thank you for handing in the assignments there. That was good. I'm sure if I gave you another 2 hours, you'd probably be spending those 2 hours doing that. So why don't we get started? So let's talk about what's been in the news first. Okay, thank you. Anything in the news that you want to talk about?
Yesterday, the market today was crazy.
You guys, listen up, guys. Go ahead.
We had most one of the worst days in months and months. Like all the indicators were like crashing, a lot of stocks were selling, and that was because of the announcement of the IMF. And that's one of the major things that were happening today.
So which stock markets were crashing?
Pretty much all around the world. Everything, like part of North America was everything closed in red. But that had affected all around the globe. Different currencies, even the Canadian dollar to the guy. So it's just affected all around the world. Yeah.
Mm-hmm. Yeah, October is usually a bad month for the stock market over the years.
Why is it?
That's a good question. I don't know. Yeah, it could be that. It's just, I don't know, anticipation of things. But yeah, there was a lot of stuff going on in Europe with England wanting to get out of the European Union.
Yeah.
Now there's talk that they're trying to do a deal where they would stay in a little bit longer. But then Trump also is preventing England from participating in a trade pact that has 46 countries in it, and they can't bid for jobs that the U.S. government has out, and that's caused the stock market also in England to go down. So there's lots about trade going on. There's a lot of pressure on China. The Chinese stock market hasn't been doing well in the last bit, especially with all the pressures around the tariffs that the states have put on. So, yeah, the world's a bit in, a little bit negative news in the world. Okay, anything else?
Everybody's busy with assignment.
That's right. You're so busy with assignment, you're not listening to the news anymore? Good. No problem. Just continue to listen to the news because there's always good stuff coming up, especially as it pertains to us up here in terms of oil and that. So first thing before we start, I talked about this yesterday, but we'll just announce it for the people that weren't here yesterday. On Saturday, October 27th, here at the Keano Theater, there's going to be a financial literacy conference, and this is actually a conference that we're putting on this through MCA, and it's really graduates from the program, just like you're going through right now, that get together once every 6 weeks to kind of do some networking. And one of the things that we wanted to do was actually do a conference, which is incredible because it's really hard to go to quality conferences up here in Fort McMurray. You just don't see a lot of that. Usually if someone comes up here, they're wanting to sell you something. This one here is going to be really good. There's going to be a wide variety of sessions. I'll just talk about a couple of them. Debt management and understanding your net worth. Hey, it sounds like what we did.
Yeah.
Retirement planning, which is great. Recent history of Fort McMurray housing market, which we're going to talk tonight about real estate. Starting a small business for those that want to start a small business. The rise of the robo-advisor, or computers taking over investing. Right? There's so much technology now when it comes to investing, and that's going to be an interesting one. And then look at this, behavioral finance obstacles and managing money. So the whole aspect of, what's up here and how that affects your financial well-being. So it's a great conference. It's only $20 for students here of the class. And they also have, if you have children, there should be no excuse because you can drop off your children ages 3 to 8. And the best thing is that breakfast and lunch is included. Okay, so where are you going to get a day like that for $20, breakfast and lunch, and your kid gets babysat? Wow, we should put that on every week. See how many people come out. Anyway, it's a great conference. If you can make it, please get, because I think it'll be worth it. It's good to get perspectives from different people on finances, and some of these speakers are coming in from all over Canada. So it's going to be a pretty good lineup, an excellent event. Okay, so let's talk a little bit about. First of all, how did you guys find the assignment? Interesting, not good. What else?
It is, but it's different. For us, because we have the problem of language first, so we can't understand every.
It is more complex.
Yeah, I'm not good at numbers. That's why I think it's hard for me.
So a little complex, right? It's a little bit more. You realize that picking stocks is not. It's not easy, but. If you want to do it well, you got to learn. It's a skill. It's like anything else.
You have to be, totally involved with all the materials. You have to read, then you will read.
Yeah, it takes time, right? It's not easy, but it's not impossible either.
Yeah.
Right? And the whole point of that lesson was just to show you that if you're going to pick stocks and you want to do it right, if you just want to guess, don't worry about it. You can do a lot all the time. But if you really want to do an analysis of a stock in terms of whether you should buy it or not, it takes work. Okay? And now,
this is opportunity.
I'm sorry?
This is opportunity. Market goes down.
Yeah.
Market prices.
Yeah. Now, you're not going to do this type of analysis with every stock you buy, but it's one of those things that if you're seriously thinking of putting in money into some of these stocks, that's the type of analysis that you should be doing. Okay? And it was intended to be a little bit hard because it shows you that you got to do a lot of research, right? You can't just rely on one part of it. You got to go into the annual report and those type of things. So it's a great, like I said, great learning opportunity for you. So we'll get those back to you next week. So We're going to give you the Smith assignment back here at 8 o'clock when we have a break. So just a couple of comments on that. So just overall, the financial statement was done very well, where you actually put down the numbers. Some people missed a number. You know, it's not a big deal, right? Some of you missed a really big number, but you shouldn't be missing that. But, you know, like a small number on the asset or liability side is not going to make a big difference in the net worth. Okay? So fairly well done. On the ratios, some people had a bit of a problem, and especially on the current ratio or the quick ratio. So if you remember that, current ratio or quick ratio also called, and again, a lot of this stuff is in your notes. Current ratio is current liabilities over current assets over current liabilities. Okay? And current assets is typically cash that you have. It's ready cash that you can use. So typically it's really only stuff that you have in the bank. I believe it was 11,900 or something. Okay, and then current liabilities, if people had problem with this one, again, it's what are your liabilities typically within the next pay cycle or the next 30 days? Okay, so it's really your credit card payments that are due or utility payments, okay? I think it's 4,600 or something like that. This came out to 220, so, okay? So some people use all of the liabilities, right? Some of you used all of the assets, but that's sort of it on the ratio. The debt equity ratio was just your total debt over your equity. Okay, and most people got that right. So even if you had your assets wrong and you calculated the net worth wrong, you know, you still had the right idea that it's debt over equity. Where people had most of the challenges is on the recommendation. Okay, some of you put a few down, some of you didn't do anything, right? So think about it. The Smiths come to you and they ask you to help them with their financial situation, right? And the first thing you do is collect all this information from them, okay? And you collect the information and then you sit down with them next week and you give them their net worth, and then you sit there and you look at them and you stare at each other for a bit. And then they go, okay, so what? My net worth is $1 million. Okay, now what? The whole point is, okay, now for them to get ready for retirement, like they asked you, what do they need to do? So there's one aspect of coming up with the answer, the financial answer. And then secondly is now, okay, what do you do with that information? It's the same with John Deere. You have all that financial information. You have tons of information available to you. Okay, so what does it mean at the end of the day? Right? So I encourage you to go through, I'm going to give you the solution tonight. And really learning comes three ways. One is when we do the lesson, right? Because for most people, either they've never heard that stuff before, or if you've heard it before, it's a reinforcement of that. Then it's when you do the homework. So that's why we get you to do homework, so that you can start applying what you just learned. That's when you learn a lot too. Like you noticed that you probably learned a lot by doing, you know, the John Deere assignment, hopefully. And the third learning comes when you compare your answer against the solution. Right? Most people don't even look at the solution. Sometimes they just hand it in and forget about it. But this is where, if you're really interested, now you can say, okay, where did I miss? What did I miss? What's the difference between my answer and what the solution was? And that's where a lot of learning comes, right? That's how you really kind of learn the information that we took up during the lesson. Okay? Any questions on that? Okay. So when you get the the solution to this. The Smith example was a really good example because it gave you a lot of information. You should be able to do your own net worth statement now, because yours hopefully should be a bit easier than all that information that was on the Smith's assignment, right? You should actually be able to go through your own fairly quickly or fairly easily. And then more importantly, look at the number and say, okay, what does that mean? Based on my core values and my goals, I appreciate everybody kind of rewriting those things again. Okay, what does my financial situation mean? Okay, take some time to do that. And it's important to do that. I want to talk about another subject. Has anybody ever heard of, we're going to talk a little bit about psychology again today, because I think it's important. Has anybody ever heard of the Teachability Index? Anybody ever heard of that? Nobody? Okay, so it's a scale, and what it does is it measures your willingness to learn and your willingness to accept change. Okay. It goes from 1 to 10. There's no science to this. But the guy that came up with this, he talks about how important it is to have the proper mindset when you're trying to learn something. Okay? And most people, what they do is that they don't come ready to accept information. And when that happens, you don't absorb any information and you're really closing the door to new ideas. So your willingness to learn is things like being open-minded, okay? Being positive, anticipation, trusting, okay? Because he talks about that a lot of people are usually the opposite. Right? They're typically negative about things, right? They're not trusting because they're thinking, okay, what's this guy trying to sell me? Right? Rather than saying, okay, I'm going to listen. I'm going to be open. Now, that doesn't mean that everything that you hear you're going to accept. That's not what this is saying. But it's more your willingness to be open to information. And it's really about attitude. Right? Like I applaud you guys for coming out to a class like this, right? Because that tells me that you have a high teachability score on your willingness to learn, or you wouldn't be here. Because you don't have to be here, right? Nobody's here on under pressure, I hope. Exactly. Right? So that's good. Willingness to learn. The next one is willingness to accept change. So it's, are you willing to do what is needed to make a change? So a lot of you are investing time, resources sometimes, right? We always talk, every once in a while, we have a chat with the MCA about charging for this course. So let me ask you, you don't have to put your hands up, but if we charged $50 for the course, how many of you would come? Don't put up your hand. If we charged 100, if we charged 1,000, right? If you had to pay what it costs Keanu students to go through this course, $700, would you come? The whole point of that is, what are you willing to do to change? Remember Warren Buffett? He went and took that course when he was 20 about how to deal with people. how to win friends and influence people. Okay. Tony Robbins, who's also a motivational coach, he spent, I can't remember how much, but when he was young, he spent like over a couple of $1,000 to go to a course to learn about things. Okay, you're in Fort McMurray. People go to Edmonton, they go to Vancouver, they go all over the world to take courses because there's a willingness to accept change. Right? So check your teachability index all the time. I know I have to do that all the time too. Right? You got to check your attitude, you got to check, right? When I buy a book that I'm interested in, I usually buy it in anticipation that I'm going to learn something. It's not, oh, here's another $20 that I wasted. Right? Like I'm excited about opening the book and reading it. If I go to a conference, I'm expecting to learn something. If I come to a class, I'm expecting to get something out of it. Right? Because if you don't, then you're not going to make any changes in your life when it comes to this thing. And again, it has to do with your mindset, your attitude, right? Developing habits. You know, we talked a little bit about that, right? Like, who are you listening to? When I say that, what are you reading? What are you listening to? Are you reading positive books like some of the books that we talked about? There's one that I just picked up, put it on the list. It's called You're a Badass at Making Money. Master the Mindset of Wealth. We'll put it on the list. It's from a lady called Jen Sincero, and she's been on the New York bestseller list. But, you know, as I was reading, it all has to do with your mindset around money. Right? I'll put it on. Because if you look at it, a lot of people are looking for, how do I make the money? Right? How do I pick stocks? Right? Well, now you know how to pick stocks. And I know that some of you aren't very excited about it because it takes work. Right? Which now goes back to, let's get back to your mind and your attitude around that. Your attitude's got to be, okay, I need to learn more about that. If I want to pick stocks and I want to do well on picking stocks, I got to change my attitude from, oh, this is just a lot of work. I'll never do it, because that's the other thing that people do is like, okay, yeah, I thought it was going to be something different. I thought you were going to give me like a formula and I was going to be able to pick stocks and make all this money. Well, no. Making money takes work. Right? So some of us have to go back now, go back to the mindset and thinking again. We're going to talk about real estate. I just changed the lessons a bit because real estate, we're going to do it for 2 weeks. And that means that you don't have to do an assignment this week. Isn't that nice of me?
Yeah.
Because if we had private deals, you'd have to do an assignment. And I know that a lot of you are, you know, based on your calls and things are, you know, that was a tough assignment, right? So this should be a week of, okay, getting back to reviewing maybe your notes, going back, rereading your values. Now I got them here, so you're gonna have to wait till next week. But getting your mindset ready again. Because the other thing that happens is that people pick stocks, they fail, and then they think, oh, okay, this isn't for me. I'm not cut out for this. And then they never invest again, which is not what you want to do, right? You make a mistake, you learn, right? It might be an expensive mistake. If I told you how much money I lost, you'd probably say, why am I listening to you? But really all I'm doing is sharing my experiences, right? But I've lost money, I've made money, but I've lost money. You can't let, you know, something that either doesn't turn out to what you thought it was affect your ability to reach your goals and your core values. Okay? So more on that. We'll talk more about this teachability index, because I always tell people at the beginning of the class, you know, what's your TI score? And you should be moving up all the time. Okay. When I meet with someone wants to talk to me about a business idea, I'm excited. I'm anticipating that they're going to share something good with me. And sometimes it isn't, but that's okay. But I'm open to it. Because you never know what that person's going to share with you that could really make a difference in your financial future. But if you're not open to it, it's not going to even come to you. Okay? Any questions on the TI? So work on that all the time. Okay, so let's talk about real estate. So if you can just go to your lesson in your book on that. And by the way, on just so you know, on the 22nd of October, okay, it's a Monday, so that week we have the class on Monday, not Wednesday, okay? For just that week, okay, October 22nd. Not next week, the week after. Okay. So people really are interested in stocks, but the next biggest thing that people are interested in coming to this course is how to invest in real estate, right? Because if you really want to become financially wealthy, you got to have real estate in your portfolio. I remember when I took over the course in at Keyano, and they wanted me to kind of take people through it. So I went through the course outline, and there was nothing on real estate. There was nothing on making money on the internet, none of that. And I was thinking, okay, well, that doesn't make sense. Because if all it is about buying mutual funds, well, anybody can do that. Okay? So real estate is important. And again, we're only going to have 2 weeks to kind of go through real estate. So you're not going to become a perfect real estate investor, but hopefully it's going to give you enough ideas and tools so that you can start thinking about it and even doing it. Okay, we've had students go through the program that within a month or a couple of months they've already bought a property. Okay, so there's good information there. You just gotta take it in. Okay. So when we look at the investment pyramid, just like we talked about last week, really income real estate is really up here. Okay? The risk is a bit higher because you're investing a lot more money, and there's a lot more money involved in buying a piece of property versus buying a stock. Usually you have to put a down payment down, and it could be thousands of dollars depending where you buy it, versus buying a share in a company that could cost, you know, $20 or $10, right? But so is the return pretty good. And that's why, you know, people invest in real estate. I always tell people that if I had to do it over again, I'd put all my money in real estate. People were shocked by that because they think, oh, not everybody wants to do real estate. But I've never lost money in real estate. And like I said, I could tell you horror stories about all the money I've lost on the market or investing in shares in companies, whether it's private deals or public deals. Okay? And there's people, I got friends that all they do is invest in real estate. They would never touch the market. They think that that's just gambling. And I have the opposite. I have people that friends that would never invest in real estate because they find that that's just too difficult, and right? So there's no right solution. This is just, you know, different avenues for you to invest. And it's not for everybody, but at least you need to know a little bit about some of the basics of investing in real estate. Okay. So there's always excuses when it comes to real estate. I've heard all of these before. Prices are too high. Right? I remember when I first bought my house, I think I told you back in 1984, 87, I thought it was nuts putting the money that I put down to buy a house here. It cost $82,000. Right? And I thought, this is crazy. Because compared to Edmonton, that same house, here it was 82, the same house in Edmonton was 50,000. So what's that? 64% higher the cost in Fort McMurray, and I thought it was nuts. When I built a house in 2007, I thought the same thing. Buying a house, I think it was like $400,000 back then. I was thinking, I'm getting in at the worst time. But you got to realize that everybody gets in at some point. It's like buying stocks. People always talk, oh, I wish I would have bought Apple when it was, $20. Well, why didn't you? Just because it's trading, let's say at $100, it doesn't mean that it's a good deal or a bad deal. But you got to get in at some point in time. But don't use an excuse that prices are too high. Got a lot of friends that, keep saying, man, I wish we would have bought more homes here in Fort McMurray 20 years ago. Well, why didn't we? Right? Everybody needs to get in at some point in time. I can't afford to buy. That's always a big one, right? People look at the price and say, oh yeah, that's not for me, right? They already start with the negative attitude. I'll never own real estate. And right away, you're closing all the doors to opportunities. We're going to talk today about how you can afford to buy by teaming up with someone, called a joint venture. The joint venture is where two parties or more come together to do something. So maybe your first property you're going to have to do with somebody, big deal. I've done a couple of those myself over the years. Some have worked well, some have not. Does that mean that it's bad? No. It's just another way to do it. But don't use the excuse that I can't afford to buy. Because if you always talk like that, that will probably happen. You'll never own one. Change your attitude, change your mindset. I missed so many good opportunities. Again, same thing. Right? Well, there's no way you can make money in Fort McMurray anymore. There's people that say that. I should have bought a long time ago, right? So they get about real estate. Well, there's still good opportunities here in Fort McMurray. There's opportunities all over Canada, all over the world. We want to really get into real estate all over the world. Great opportunities all the time. I can't get financing because of my credit. Okay, well then start fixing your credit. Don't complain about it. Take some time to fix your credit. Those of you that take level 1, we talked about credit and what things you can do to fix your credit if credit's a problem. But in the meantime, doesn't mean that you can't get into a property. Maybe you can do a deal with somebody else where they've got the credit. I should have started years ago. It's too late now. We talked about that. This is a big one. I don't want to deal with tenants, toilets, broken furnaces, etc. I got friends that say, you do the real estate. That's for people that want to worry about all those things. They don't realize that there's a solution to that. What's the solution?
Whatever they broke, we can charge to them. What to say? What is that damage cost?
Okay, yeah. Okay, so you're protecting yourself from damage deposit, but what else? Property management.
Yeah.
Right? So property management is one way to alleviate that. We're going to talk a little bit about that, but you pay 7 to 10% of the gross rent to someone to take care of your property. And especially if the property's somewhere else, right? I have properties in Vancouver and Edmonton. I don't manage them. I pay 7 to 10% and they take care of that. Because I can't be there, nor do I want to be there. But people will use this as an excuse. Right? It's an easy way to just put real estate aside. You want to find an excuse, you'll find it. I don't have extra cash to purchase property. We'll talk about that also. And here's one. I don't have enough knowledge to get started. You're going to get enough information over the next 2 weeks that if you want to start investing, you can invest. Remember, this is the same thing we talked about a couple of weeks ago. People, you know, they don't want to take that next step, right? Because it's scary. So they just forget about it. But you'll probably know more about real estate investing than the average Canadian will know. It's just whether you're going to do anything with it. Okay? And it's too risky. Well, what's not risky? Put your money in the market. I'm sorry? Well, it depends again on your core values of what you. But my point is that any time that you put your money into an investment, whether it's real estate, a private deal, a public deal, there's always risk. Okay? But if your focus is long-term, which is, again, what we talked about last week with stocks, if your focus is long-term and you make the right investment, you're going to do well. You just got to be patient. Okay? So all those excuses, it doesn't matter. I did this course 5 years ago. Those were the same excuses 5 years ago. If I'm here in 5 years and we do this again, it'll be the same excuses. Those don't change. Okay. When is the best time for you to invest in real estate? Today. Especially if you're not in real estate. You got to get started at some time. So the key is, okay, you got to go out and look, just like doing an evaluation of a stock. Doesn't mean that you just invest anywhere. Doesn't mean that you just buy any kind of stock, no matter the price. You got to do some analysis. But if you want to get into real estate, there's no perfect time than there is today. I went to my first real estate course, I think in the late 80s, and they were talking about investing in Fort McMurray at that time. And me and my buddy who were from Fort McMurray were saying, this guy's nuts. Because back then you could have bought some of the condos at Signal Road up in Thickwood for $32,000. And we were saying, and it just didn't make sense, right? Because the price of oil was down. They didn't know how long some of the projects were going to last. But people that know what's kind of going on, they anticipate things. And then 10 years later, we were saying, man, we were in this course. The guy told us where to invest. We lived in Fort McMurray and we didn't take advantage of it. But the point being is that if you want to get into real estate investment, today is the right day. Doesn't mean that you can never go wrong. There's never a wrong time to invest if you choose the right strategy. So here's some interesting charts, and I usually try to get this updated, and so we only have it to 2014, but I have the updated ones, and this goes up. But almost any chart on real estate in Canada is very similar to this, right? Went down in the 80s, kind of flattened out, and then in the early 2000s, it just went like crazy. Then it came down a bit, but now it's a little bit more stable. But that's the way the chart looks for housing prices in Edmonton. Toronto, okay? If this was a chart here, it'd be way up here right now. Right? Vancouver, same thing. Crazy right now. Toronto and Vancouver are the highest real estate markets. I'm not saying you should invest there, but I remember when I first bought my property in Vancouver, I thought it was nuts. Paying what I paid for the unit that I bought. Now I'm glad I did it. Yeah. But back then it was scary because compared to prices in Edmonton and Calgary, it was almost 60 to 80% higher. But again, if you look at it from a long-term perspective, you're going to do well in real estate. Halifax, same thing. So you notice that the only difference is the scale, right? Okay, you're talking in the way up in the 700s. Now with Halifax, it's again, it's double in the same period, but you're talking from 150 to 300 rather than 250 to 500. Okay, so you know we could put up a chart very similar for like a lot of cities all over the world, even cities you come from, and you see some of the same things over the last 20 to 30 years. Real estate, for the most part, goes up, up, and up over a long period of time. Okay, so there's multiple ways to building wealth with real estate. Okay, one is appreciation in the market values. So what do we mean by that? So what happens is that social trends, and what we mean by that is people move to cities, move to communities. What ends up happening is it pushes the real estate price up. That's what happened in Fort McMurray, right? Population, development, immigration. So where do most of immigrants that come to Canada go? Where do they go? It's kind of interesting, eh?
Yeah.
Toronto, Vancouver, Montreal. And the first two are places that housing market's going like crazy, right? Inflation. So even without market appreciation, inflation will cause real estate prices to go up. So again, you know, house that I paid $82,000 is worth about $500,000 today. Just normal inflation. And also appreciation of market values. Cash flows. Rental income gets pushed up higher and higher over years. So rent, for those of you that rented, may have noticed that over years it typically goes up over the long period of time. So you make money as a real estate owner in just rents. If you increase your rent the way you're supposed to every few years, you could be making more and more money all the time. Okay, mortgage payoff. This is one of the best principles of real estate, is that your tenants are paying off your mortgage. So what we mean by that is that every month that you get rental income, that money is going towards paying the mortgage. So the liability, right, the mortgage balance is going down and down all the time. Okay? So think about it. Your mortgage is going down. Appreciation in the value of the real estate is going up. Inflation typically goes up, even if it goes up 2 to 3%. And rents are going up. Is that a good news story or a bad news story for an investment? Exactly. It's the perfect one. Exactly. It's one of the very few investments where someone else is paying off your liability. Okay? If you borrow money to invest in stocks, that's good too. But no one is paying off that. You have to pay that off. Okay? This is totally different in real estate. Someone else is paying off that, the biggest part of that investment, which is the mortgage. Buy below market value. This is a really good principle. They say that you make your money in property when you buy it, not when you sell it. Which means that you got to do really good analysis and homework up front. Because you can buy properties overpriced, right? And All that means is when you buy it overpriced, it takes longer for you to recuperate that. Okay? It doesn't mean that you've lost anything, depending on where you buy, but it just means that you might have to wait longer. So if you do your homework up front and you buy a property at market value or below, and you do those things, you're going to make money eventually. You can't go wrong. You know, a lot of people that, you know, like my parents, a lot of people of my dad's generation, they didn't get into stocks. Okay? My dad said, I want to touch it. Right? This thing about paper, never trusted stocks. Different generation, right? They want to be able to go over at the beginning of the month and pick up the rental income and know that they have a building. You can create property value with improvements. So there's people that do that too. You buy a rental property, you invest a little bit of money, and it's amazing what you can do to make it look a lot better and increase in value. It improves with the neighbors and the neighborhood. So depending on where you buy again, right? There's areas in Edmonton and Calgary. Look at people that bought in the Ice District in Edmonton a few years ago before they decided to put a hockey arena there, right? Values go up. The next one is converting the use. So this is condos to apartments and vice versa. And one of the best parts about rental properties is when you go to sell it, what is that? Yeah, it's a capital gain, right? So you only pay tax on what? Half of the gain. Isn't that a great deal? Right? So you look at all those reasons why you should be in real estate and you go, wow, yeah, it makes sense. I'm sold. But again, you got to have it the right mindset and you got to look at it from a long-term perspective. If you're looking to what's called flipping homes, and people make money at that. There was a couple of guys in the class a couple of semesters ago that's what they did. But they're in the construction business. They know what they're doing. Me, I don't know what I'm doing about construction, so I'm not going to do that. I'm not going to go buy a property way below the market value with the intent that I'm going to fix it and sell it at a higher price. That's just me. But someone that has those skills, they can do that. But this is not about flipping properties, because people talk about that. This is about having a long-term view on real estate. Okay, let's take a 10-minute break, and then we'll continue. So come and pick up your assignments. There's going to be 3 piles. One is the goals and core values. The other one is the Smith assignment, and then I'm going to have the solution here for you too, okay? And on the Smith solution, there's 2 pages. So take one of each. I'm just going to put this here.
You could make goals on top of me. Okay.
The neat one.
मारू आपण उपलब्ध पडलो नंदाबाई तरी त्याच्यानंतर मला आत्माची passive. कोई मतलब अच्छा कागजात
itu yang berdiri.
तेजल में कार आईफोन है तेजल
सॉल्यूशन सुरक्षा पेपर पास करते मार खाली आम्हाला चप्पल काय छे मारा रेशियो जे એટલે પેપર સોલ્યુશન લખી જાને યા પર નો સોલ્યુશન મને આલ દીધું બેલા બાબત
Right now, you're putting money in that account. So that's a match. Okay, whatever it's worth, because you're putting money. But the payment that you make is considered a current liability. Okay? But these guys don't have current liabilities. They only said, it said in the question that this is how much they had in the REA. Okay, so that's why it said asset. But even the one you have is an asset. If you knew what was in it, when you get a report every year on what it's worth, that should be an asset.
I understand that I did like that. Because right now we are going for our kids and our life. We are paying every month for installment. But now it's submit again and take a picture of no listen because I didn't know why I just want to finish it up by this next.
And can we submit like solution like after next week? I already did the 5 pages, but I try to understand. But I can't understand the whole.
But I because I don't have the papers that I need to read it. Okay, just give me one second. I want to draw. I know. I had one question. Do you think the market is going to go up? Yeah, it's too much stress.
It may take a while.
Do you think it's going to go up or down? But no, the thing is like a bit good in the picture.
As long as you stay for a while, right?
You think so? It's going to go up?
Okay?
Perfect. I'll do it. It's going to be
No problem.
Thank you for your help.
Yes, we want to submit like
Right now, the money is almost 200,000 down.
It depends on the house.
150 to 200. You think it's going to go even on because the way
Yeah, you did. You're only in it. When did you buy it?
I had one in 2008, another one in 2009. But everywhere,
Almost perfect.
always one we get it in 200. But here it's like 100,000. But at the time it was like you were saying, it's like bouncing on my head because you say it's totally okay. It was perfect. The rent was at the time it was 1900 and it was about to go to 2100. So we bought an apartment. So whatever we were paying around 100. So basically it was a resale. So it worked very well for 2 to 3 years and then it went so down. Now from our pocket we are paying 70. You are saying that you can get the management, rental management. There is no rental management.
Yeah, we don't need it.
But it's kind of like in this kind of the way they are putting up positive. Population is less than whatever housing. So do you think the same thing is going to apply to
Over the long term.
you think so?
Over the long term. Over the long term.
I really wish it happened in the oh my
So I did it by whole assets, by whole library, right?
Anyway,
Yes, and how much time?
એવું નથી લાગવા આપણે એને કઈ રીતે રેકોમેન્ડ કરશું તમે એક પર્સન તમે ટ્રસ્ટ કરો કાલે તમારે પાસે આવું તો મને આવું સોલ્યુશન સારું જ કરો કે સારું સોલ્યુશન
ફાઇનાન્શિયલી ડાયો સારો છે પછી શું
એવું શાળા એવું નથી કીધું એવું બોલવાની
આની વાત કરું છું એની વાત ક્યાં કરું છું સ્વીટની વાત સ્વીટની સોલ્યુશન આપ્યું છે જો મેં છું ઇઝ સોલ્યુશન તો આમાં બહુ સરસ સ્વીટ માણસ સારું કરે છે બહુ બધું પ્લસ
એ જ વસ્તુ બતાવવાની છે આપણે એનું વાંચી લે બરાબર પેલા સોલ્યુશન એ લાઈન મૂકવાનું આપણે
શું કે
વિરાય સ્લીપ જેટલું વસાવવાનું આપણે હોસ્પિટલ કે ઘણી વાર નીચેના ક્લાસ બંધ કરી દે ક્લાસ બંધ કરી દે
પણ કોકના કરતા
So when we get started again, okay, so people were just asking about the solution. So, you know, they kind of said, wow, that's a lot of information. But if you go back to your lesson on how to increase your net worth, you see ideas on how to do that. That comes right out of the lesson notes. So go through the recommendation and pick up some ideas on that. Okay, so let's continue. So strengthening your credit power. So if you have strong credit, it'll make the boring part of the mortgage a lot easier. credit scores typically count more than character and consistency. Okay, so especially nowadays, typically somewhere in Toronto, a bank makes a decision. It's not even the bank here in town, and they don't know who you are. They don't know that you're a good employee or that you're a good person. They don't care. All they look at is your credit score. So you got to get your credit score under control. We talked about finding out your credit score. Don't wait until you need credit. Check for errors now. That's why it's important to look at your credit report at least a minimum of twice a year. See if there's any errors in there and get them fixed before you go and apply for a mortgage. Credit bureaus only report the data creditors provide them. Your spouse or partner's low credit score can also determine whether you get approved. So don't leave your spouse over that. I don't want to be responsible for that. Okay, don't come back and say that I got divorced because Jay told me that your credit score is too low. Okay, your ex-spouse can ruin your credit. Okay, so don't do anything bad to your ex-spouse either. But he or she could ruin your credit if you were on joint accounts with that person. So again, you got to start looking after that right away. Okay, so how to come up with money to close. Okay, so when you make a deal, here's some ways to come up with the money. Cash out some of your current equity, or use your home equity to get a line of credit and use the funds to close. Okay, we're on page 70. We're on page 70 for those who want to follow. Okay. So there's people that have equity in their home. Okay, so you can borrow typically up to 70% of the equity that's in your home. Okay, so if you have a home that's worth, let's say, $500,000, and you paid off $300,000, you have $200,000. That's called equity. And 70 to 75% of that, so about $140,000 to $150,000, you can get a loan or a line of credit, and then use that money to put as a down payment on the rental property. Okay. The other good thing about doing that is what? What happens to the interest on that? Sorry? That's right. So the interest that you pay on this $150,000, as long as you use it to buy a rental property, you can deduct that interest from your tax.
No question. Like you can use this equity to build a basement.
Yeah.
As a rental property.
As a rental property? Yeah. Yeah, you can use it as whatever you want. You can use it, and if it's used for the purpose of generating income through a rental property, whether it's an improvement to the property or to buy it, that interest is tax deductible and comes off of your income tax. Okay.
When we will file our income tax, we have to show them the papers that we have.
No. If you get audited, they may ask you for the statement from the bank that you paid that interest. So the only thing that I would say is try to keep that separate than from your personal account, because then it gets really messy, right? So if you use it strictly for that, and you can set up now accounts like that. Specifically a line of credit, and use that line of credit only for investment purposes, so that all the interest goes to paying or to as a tax deduction. Okay. So that's one way to get money, because some people don't realize that they have equity in the other assets that they can use to get a line of credit. The other one that I like to use is what's called a joint venture partner. Okay. Partners can provide the money, you provide the talent, time, and business plan. I remember one of the first homes that I bought with a buddy of mine from university, and I was in accounting. He was an engineer, so he had all the money, and I did all the accounting. He provided the down payment. So we made a deal that when we would sell the home, He would get his money first, I would get my money, and then we'd split the profit 50-50. Okay? So you can write up a joint venture any way you want. Typically it's 50-50, but it all depends on what you're bringing to the table. I've been in joint venture partnerships where I go out and do all the homework and find the property, and the other guys provide the money. Okay? We use that to buy the property. And again, when we go to sell it, first they get their money that they put in at the beginning, and then the rest is split 50-50. But you can have any type of arrangement. So the only caution I would make is make sure you know who you're getting involved with. Okay, because I've had horror stories on a couple of joint ventures that didn't work out too well. And, you know, again, you trust people, right? But remember, this has got nothing to do with trust. It's got more to do with being a business partnership. And even if you've known someone for a long time, make sure you put it on paper, because things change. Even with family, unfortunately, you got to put it down even on paper, because it can cause a lot of
their mind.
Yeah,
Or you can change your mind.
yeah, people change, and I got into a couple of properties with a couple that I thought were my friends. They got divorced, and then she came after me and him for the properties that were under all of our names, right? And we didn't have, unfortunately, and I knew better, but I didn't have a joint venture agreement, and so it created a lot of problems. So joint ventures are really good, especially for those of you that think, okay, I can never get into a property on my own. But, you know, there's people in this room that probably would want to do a deal with you. Okay, you just got to find them. But if you never talk to people, if all you do is stick to your own little group, okay, you're never going to meet people that may want to do a property with you, right? That's the importance of going to those things. If you really want to get into real estate in Edmonton, there's a group called RAIN, Real Estate Investment Group. They've been around like since the 80s, I think. And they get together once every few months, and they have conferences. And so if you really want to get interested in real estate, you got to go to stuff like that, meet people, hang around people like that, learn, and then those are like-minded people. They want to do the same thing. Chances are you may be able to find, you know, someone to do a joint venture with you. Okay? Write out the business plan before approaching potential investors. Have in your own mind what you want out of this deal. How much money can you put down? What are you willing to put on the table? Again, choose a person with character first, money second, and develop a partnership agreement. Any questions on joint ventures? I remember one of the most fascinating real estate courses I took was a course on joint ventures. That's all he talked about for 8 hours. On how to create it, how to approach people. Like, it's just a totally different thing when it comes to real estate, which takes away the excuse of you got to do it all on your own, right? You think of joint ventures, you think of Syncrude is a joint venture. It's owned by different companies. So why is that? Because when they first started Syncrude, it was fairly risky. So the government was involved, both the federal and provincial government, and about 8 different companies. Now there's only 4. But think about it, it's the same concept. Those companies didn't want to do it on their own. Too much of a risk. So they went out and found partners. No different here. You're just doing it at a smaller scale. Okay, second mortgages. A holder of a second mortgage simply stands back of the claims of the first mortgage. So what this means is that you can get a second mortgage on a property. Okay, you have your first mortgage. So let's say the bank will only lend you so much amount of money. There are banks that will give you a second mortgage. So that's another way to close. I usually don't suggest this as an option, but using credit cards, but it's not a long-term financial solution, okay? But there's people that have pretty high credit limits on their card, and you could use that money for a short-term solution to come up with money to close on a mortgage on a property. Personal loans. Lenders will grant loans as personal wealth increases. Okay. Use creative financing like agreeing to swap services or products. Okay. If you know how to do construction, you can do a joint venture with someone, and you do a lot of the getting the house in shape, and the person puts in the money, and again you split the money at the end 50-50. Right? There's different ways to come up with creative financing. Borrow or reduce the real estate commission. Okay, sometimes depending on the real estate agent, they may give you a deal on the commission, so the money you save on that you can use. Simultaneously sell off part of the property. Okay, if the property has other assets associated with it. And this one here, prepaid rents and security deposits. Okay, even though that's a liability that you're going to have to pay back, you could use that because you typically get a month's in advance and the damage deposit, right? So that could be, a few $1,000s right there. Okay, so what does the bank use when they determine whether they're going to give you a mortgage or not? One is called the total debt service ratio. And this is an assessment of the amount of debt that an individual can afford. So it's calculated as the annual mortgage or rent payments plus property taxes, utilities, and 50% of the condo fees divided by the gross family income. Okay. In general practice, to include consumer debt, which has been granted. Okay, so you got to be careful. So this is the same as what we talked about in level 1 when we talked about credit. If you have credit and you're not using it, it could still be used against you in this calculation, because the bank may think that you could go and use that up. So if you've got a $5,000 credit limit on your Victoria's Secret card, okay, even though you don't have any money against it, they can actually use it against you as credit because you could run it up at any time. So get rid of credit that you're not going to use, or limit that. Okay. Receiving a ratio of less than 40% means that the potential borrower has an acceptable level of debt. Okay, then there's the gross debt service ratio. Okay, so this is a little bit different in that it doesn't include for non-housing related payments. Okay, so this is only the property tax, utilities, 50% of condo fees divided by gross family income, and it can't be more than 32%. So one of the things that banks do now, it's getting harder and harder to finance properties, and especially rental properties, because banks don't want to take risks. I remember when I was growing up, people could use, your current rental property as equity to get other properties. Now you can't do that anymore. Okay. The other thing that the banks do is that they only take into account 50% of the rental income that you get on a property. So think about that. let's say that you're collecting $1,000 a month for rent. They only include $6,000 of that, because they think that if a renter leaves, you have to come up with a mortgage payment, right? So eventually, the more properties you have, you're just not going to be able to qualify. So it's becoming harder and harder, but that's no excuse. And it's typically for people that get into like more than 5 properties at a time type of thing. Okay. So, it goes back to your debt servicing ratio. So how do you increase your qualifying income? Because they obviously look at your income. So salary, overtime, bonuses, commissions. Now the only thing is that sometimes the banks don't like to use that. They won't include your overtime, and they won't include bonuses because they're not guaranteed. So you could be making an extra, let's say 30% of your income, but they might not take that into account. Commissions, alimony, interest, retirement, disability income, EI, secondary employment income, tips, rental income, and dividends. Again, banks are getting very strict on some of these things, including them in your income. It really boils down to just your employment income. And if you have a business, it's even harder to get it, because they want to see typically 3 to 5 years of your returns to make sure that you have consistent income coming in. Very difficult for people that are on commission for them to get into rental properties. It's more difficult, not impossible, but more difficult. Right? People that have steady jobs, they have a better chance because it's steady income. Reduce your disqualifying debt. Again, we talked about this in level 1 under credit and debt. Pay off your loans, your auto loans, your student loans. Revolving debt, pay it off every month, because they'll take a look at that. Consolidate bills, pay down debt, pay off debt, and avoid new debt. Because if your problem is around your credit, you may have to wait until you get that under control, and that could take a bit of time. But that doesn't mean that you should never lose sight that you can have real estate. Okay, because again, you can get into a joint venture, but you eventually got to get your credit under control. That's why it's so important. And people sometimes don't take their credit that seriously, like, well, whatever. But it does come back at the end. Okay. Okay, so obtaining financing. So you'll need a what's called a down payment, and in Canada, this is for rental properties. They'll ask for a minimum of 20%. It used to be that you could get in with 10%, and that's no longer the case. So you're going to have to come up with 20% as a minimum for down payment. Almost every lender will want that. If you're purchasing a condo or buying into a higher risk city, they may ask for an additional 5%. So you're looking at maybe sometimes 25% of a down payment to get into a property. Picking the right lender matters more than ever. Know your total debt ratio. Again, many lenders will only use 50% of your rental income. So even though you might be able to make that, I know that I've had problems too, because what ends up happening is that they want to see a lease. So if you have other rental properties, they want to see a lease of what that person is paying. So the problem with that is that when you sign a lease, typically the ones I do is for 12 months, and then it goes on a month-by-month basis. Okay, that's the way most landlords do it. So, but they don't want a month-to-month lease. They want to see a lease that's in place for 12 months. So now you got to go to your tenants and get them to agree to sign another 12-month lease, which is a pain. but banks won't accept a month-to-month lease because they think that that's too risky. Okay, so a lot of hurdles in the last few years when it comes to getting multiple rental properties. And when it comes to picking the right lender, the best thing to do is always go to more than one. Obviously, go to the major banks. Have people heard of a mortgage broker? Yeah, what's a mortgage broker?
They go to different banks and find the best rate.
Yeah, excellent. So yeah, a mortgage broker doesn't typically work for a certain bank, but when you go to them, what they do is they take your application and they go to different banks and sell that business to a bank, and they get a commission off of that. But so brokers are good because it saves you a lot of time. But you should always go to your bank wherever you're doing banking. And you should always try to make a deal with them because they should be giving you the best deal. Your current bank, if they value you, they should be giving you the best deal because you have other things with them, right? You may have a car loan, you may have your RRSPs with them, your TFSAs. And if you're not getting the best rate, you just go somewhere else and they'll want to make a deal with you. And then you can also go to a mortgage broker. Okay, any questions on that? So with a mortgage broker, you don't have to pay them. The bank pays them or whatever. They can either go to a bank. It's very interesting. I've used a mortgage broker. So I've gone to my bank, was denied a loan, even though I have lots of business with them. Go to a mortgage broker. The mortgage broker goes to my bank and I get a loan. It just doesn't make sense, but that's why you got to use different ways. And if you get rejected, don't give up. Just look for other ways to do it. That's what I'm talking about there. Multiple rental properties equals a lot of headaches. And it's more around the restriction about getting financing. Okay. Now, if you don't have a rental property, you don't have to worry about that. So don't make your excuse. Okay. If you don't have a rental property yet, you can get a rental property as a first-time, real estate investor. Okay. More paperwork. A few years of tax returns you got to provide, like I said. And also, you have to have signed leases that are active, which is a pain for those that have month-to-month leases. Okay, so why do properties sell for less or more than their market value? So obviously, market value means what similar properties are being sold for. Okay, one reason is that owners are in distress. So sometimes people have stuff that happens in their lives, right? Breakups. The other person dies, they're widowers, all those type of things, unfortunately. And what ends up happening is that the person will sell that property for less than the market value. So if you think about it, you're not taking advantage of anyone because they're probably wanting to get out of the deal and you're probably wanting to make a deal. But if the owner is in distress, typically you can get the property for less than market value. The other one is the grass is greener sellers. Okay, some people want to get out of a property because they think it's a better deal to go somewhere else, so they're willing to sell that property at a lower than market value. Okay, stage of life sellers. This is a big one. So people are eager to move to their next stage of life. For example, older couples, right, that are retiring, they don't want all the responsibilities of yard work and shoveling snow, so they want to move out of their home, so they'll sell the home so they can get out of that situation. Okay. Cranky landlord. Some see the landlord as nothing but trouble, consistently battling with tenants. Okay. Preserve the lender's image and balance sheet. So banks become owners of properties where owners fail to pay their loans, end up with foreclosures on their hands. So lenders want to mitigate their losses. So there's people that what they do is they phone banks and they ask, okay, are there any foreclosures? Foreclosures are when someone can't pay off their mortgage after a few months and the bank takes over the home. Okay? So banks are not into the business of managing properties, but they'll take that as an asset if you don't pay the mortgage. So typically those can go for pretty good deals, sometimes below market value. And then the one, seller ignorance. Sometimes the person just doesn't know what they have, right? They haven't done any homework to find out what the house is selling for in their area, and they just sell it for a price, and you come across that, then you gain. Here's something that's really important. Do your due diligence on lower priced properties. This is very important because sometimes you see a property that's below what it should be for similar homes, and you think, wow, what a great deal. Okay? Beware of fix-up expenses. So there may be a lot of work to be done. So an example is, you know, the home is 40 years old and the roof has never been fixed. Well, a roof can cost anywhere from $10,000 to $20,000 to fix. So that might be a lower price, but you're going to have to probably change the roof at some point in time. Or you're going to have some pretty wet tenants. Okay. Environmental problems. Lead paint. Okay, so the issue with lead paint is that if it was painted with chemical, with asbestos or whatever, or sorry, with lead, then that's dangerous. It's an environmental concern. And then instead of people just stripping the paint and repainting it, they just sell the house at a lower cost. But then you have to do something about it, or you could be held liable if your tenants sue you. So you need to be careful about that. Also underground oil storage tanks or gas tanks, things like that. Okay. And then the neighborhood, right? It could be in a pretty bad neighborhood, and that's why the price is so low. So when it comes to real estate, location, location, location. Right? Very important. Don't look at the fact that, well, I can get it for $20,000 cheaper if it's the kind of place where families don't want to move to, because then you won't be able to rent it. So you've purchased the property for 20% lower, but now you can't rent it. So what have you gained? Right? My philosophy when it comes to rent for buying rental properties is always buy something that you would live in it yourself, and buy in a community that you would live in or your family would live in. Because if you wouldn't, you expect other people to? You shouldn't, right? Then you're getting into something risky, right? So beware of lower priced homes because of those things. Always conduct a proper and thorough physical, financial, market, and legal analysis of great deals. Very important. So what we mean by that is get an appraisal done on the home, an inspection, pay the $200. It's worth all the money in the world. Ask for a disclosure statement from the seller. So this is a list that explains all known problems or defects that plague the property, water damage, fire damage. So one of the interesting things about what happened with the fire here in Fort McMurray is that if you should have something from your insurance company, bless you, that should have, that says that this property has been inspected post the fire and that there's no issues there. That's important to have when you go to sell the property, because the buyer may ask for that, because they don't want to move into a place that has, again, the insulation that's damaged, or that is ineffective because of the fire damage. Okay? Insist on disclosure facts. So what that means is that any issue that the home has had has to be disclosed to the buyer. So again, water damage, fire damage, any environmental concerns. And if you ask for that and they don't give it to you, and then you buy the property and it has one of those, you can actually have you can sue the individual for that. But if you don't even ask for it, it's buyer beware. And you got to be very careful with properties because you're buying a big asset. It's not like buying an Apple stock where it goes down a bit and you can just sell it. Toughen up the pre-purchase inspection. Invest in professionals to conduct an inspection. So I had a student that took the class last semester. I think a couple of weeks ago, they sent me an email. We're in Edmonton. We found a property that's like really good deal. Should I buy it? And I'm saying, okay, well, I don't know anything about it, but go to this page and reread that, and then let me know what you decide. And he called me a couple of weeks after and said he didn't go ahead and buy it. Right? Be cautious because it's very tempting to buy something that's below what it should be. It should be reasonably priced within the market and not that low. And if it is that low, be careful about it. I'm not saying that it's a bad deal. You just have to be more careful. It could be just like we talked about earlier, people trying to get rid of it, whatever, and that's okay. But it could also be some of these things. So you want to make sure that you have that covered. Okay, so how do you find sellers of properties? So the best way is networking. You need to be out there, you need to talk to people, and you need to let people know that you're interested in real estate. I know that when I was going to some of those RAIN meetings, people would actually have business cards made up, and it says, we buy houses, right? And they used to give them out to just people. Because you never know when that person needs to sell the home, and if they've got that card, it might give you a call. But if you never do any networking, so this is getting back to what we talked about earlier, right? It's who you hang around with, who do you know? Because people think that they can make a lot of money just sitting on their computer and trading all day, which is fine. But if you want to get into real estate, it's not going to really happen unless you network. Okay, networking. Friends, family, relatives, co-workers, church groups, clubs, business associates, customers, parent-teacher groups, any other acquaintances, business clubs, things like this. You know, continue to come to those financial network meetings that we have, and you meet people that want to do the same thing, right? Newspaper publications, you know, online. Right now, I mean, you can go online and there's so much information on homes that are available. Try running your own ads in the wanted to buy column. Describe what you're looking for. Okay. I remember going into the States and there'd be these big billboards saying, "We buy ugly houses." You ever see that? Yeah. It's like, who is that? But somebody bought a billboard. And if you think about it, you pass by, but you know, some people, there's going to be people that pass by that will say, you know what, I want to sell my house. I'm just going to take that number down, right? And that's how people get deals. All you need is one person to do that. Okay? You're not buying thousands of homes. You're just buying one at a time. But that's one way to do it. You need to let people know that you're interested. Look for properties advertised for rent or sale, as the owner may be flexible. So what ends up happening is sometimes people want to get rid of a property, but they also want to rent it at the same time. That's usually a sign that someone may want to sell the house. Cold calls to directly to owners. Okay, so what that means is in your area, just make calls to people that you know that may sell. Put a flyer out. Before you list your home for sale, please call me. I'm looking for a property in this neighborhood directly from owners. Let's see if we can sit down together and work out an agreement that will benefit both of us. So I get that, and I'm wanting to sell my home. I'm going to do that rather than go through a real estate agent, because I'm going to save the real estate commission fee. So all you need is one person on one day that's thinking like that, and you can get a call. And is it worth the whatever 10, 20 bucks of photocopying that you did and paying some kid to deliver them at every, right? Of course. Right? You got to do something different sometimes to do that. Look for vacant homes and out-of-area owners. Often out-of-area owners are sleeping sellers. So there's people that own property in Fort McMurray that live outside all over Canada and are probably looking at selling the place. Ask tenants for numbers of owners. They give it to you. Expired or about to expire listings. So these are listings that are with real estate agents, and they usually have a contract with them to keep it on the market for 3 to 6 months. But once that expires, then you can approach the seller of the property directly and make a deal. Okay, real estate agents. We're going to try to get a real estate agent to come and talk to us next week, but they can provide you with valuable information. If they know that you're interested, they'll call you when deals come up. So I've got a couple of real estate agents in sort of my network that they call me once in a while and say, hey, Jay, there's a property in this place. Now, I don't always buy it, of course, but they know that I'm interested. So if you have real estate agents that you know, just let them know, hey, listen, if the right opportunity comes up, let me know because I might take a look at it. Eventually, you got to buy something or else I'll never call you, right? But it's a good way to do it. Of course, the internet, thousands of websites now list properties. I mean, you can have access to so much information now on properties all over Canada that you should have no problem finding a good property. The downside is to that is that there's so much information that you just forget about it. Okay. Okay. Any questions on that? We'll stop there and then we'll do the second part of the lesson next week. Any questions on some of that real estate stuff? Okay. Take some time this week to go through your notes. And we'll see you next week, next Wednesday. Okay, thank you. No, that's a conference.
And then one you said in Monday.
The 22nd of October.
Stop this.